So here we are, November 2022, and the stock markets across North America for sure have taken a beating. Many stocks that typically were considered to be darlings of the market and a safe place to hide are no longer that fact. Companies like Amazon, Google, Facebook, even Apple have taken a beating this year. And as you see in the heading of this video, panic selling is creating the biggest transfer of wealth from the regular folk to the rich of the world. The folks that are reaping the benefits of the panic selling that's going on and the outflows are nothing to be sneezed at. Equity funds are suffering the largest outflows of 2022, Bank of America. Investors pulled $9.4 billion from equity funds in the week to Wednesday. U.S. equity funds suffering $6.1 billion of outflows. So you got to ask yourself, when somebody buys an asset, somebody else is selling an asset. So who's selling and who's buying? And what a lot of people don't understand about stock markets is wealth is created in bear markets, in the downturns, because what ends up happening, a high percentage of the people wait too long to sell their stocks at a high because they try to time the market, and usually timing the market doesn't work. However, there has to be a buyer and a seller. So generally, hedge funds, larger investors, the Warren Buffetts of the world, are the folks that are on the other end of the panic selling. When somebody turns around and dumps their shares in Amazon or Facebook or Apple or many of the mutual funds or ETFs that hold a lot of large cap companies, the people who are buying them up at a discount are the hedge funds and the professional investors, because they buy low, and then when the market does turn around, and it will, they'll sell high, or they'll start selling when the market is getting to its peak. And then they'll back off and they'll hold a high cash position in their portfolios, waiting for a time like this where people start to panic sell. And it's very, very sad that many seniors in 2022 have started to sell their stocks and their mutual funds and their ETFs. In the hopes of buying fixed income. Now, interest rates are at the highest they've been in a very long time, and you can get a GIC for 3, 4, 5% for a year or two. But the problem is timing. If you're somebody that is retired or close to retirement and you sell your current portfolio assets at a 40% drop from what they were a year and a half ago, and then buy GICs, you will never get your money back. It just doesn't work. There's not enough appreciation in fixed income. There really never has been. I mean, back in the day when you could, buy a GIC and get 10, 11% interest, while you could actually live off that money. The same with bonds. Back in the day when bonds were 7 or 8, 9, 10%, you could actually live off the coupons off of bonds. But the sad thing is, what's happening right now is the rich are going to get richer and the average guy is going to get poorer. And this has been going on since before 2008. when that crash happened, and there was tons and tons of seniors that were completely wiped out, lost most of their retirement savings in the markets, and those stocks have to be, when you sell a stock, somebody has to be buying it, and unfortunately, the people who are buying it are the billionaires of the world who have financial advisors working for them, and they're waiting for the markets to crash. And I firmly believe that a lot of the times, a lot of these pullbacks are orchestrated and created by the big funds. Because you got to say to yourself, well, why, when a company, let's say, puts out less impressive earnings or less impressive growth, or they turn around and they have their timing for putting out their earnings, and they put out a guidance that's less than what the stock market analysts or the markets were expecting, and all of a sudden that stock drops 25%. Now, we've had that happen in Facebook in the last while. We've had that happen with Amazon. We've had Google drop. We've had all these different companies where, their stocks just took an absolute tanking for missing their earnings guidance by fairly slim margins. I mean, you think of Facebook. Facebook has $27 billion in revenue, but because their earnings are a little bit lower than what they were supposed to be this time around in October, and their guidance was lower, and so on and so forth, the stock dropped 25%. I mean, why would you sell? Why would you sell? It makes no sense. And that's the problem with what's going on in this market. And you can be rest assured all the institutions are buying up Facebook and Amazon and all of these mega caps right now, because they know it's going to come back the other way. They create the market, they manage the market, and it's their buying and selling that orchestrates the ups and the downs. A lot of it is being done also by algorithms, fancy computers that create the market dips and volatility. So, how can you help yourself? Well, you got to just take a step back and look at history. History is a perfect glimpse into the future. And when you think about what has happened ever since, we'll say, the Great Depression, the markets have peak to trough, peak to trough, peak to trough. The markets have tanked, and then they've come back. They've tanked, and then they've come back. And they've done it again and over again. And if you look at the history of the S&P 500 or the Dow or the TSX in Canada or any other stock market, the same thing that's happening now has happened in the past. Okay, fine. We have some stuff going on in the world, like the war in Ukraine with Russia, and we went through a pandemic. We have a lot of uncertainty political wise in our world. So there are a lot of weird things going on that you might say, okay, well, that's affecting the markets. But in reality, all these things are really just a reason for making the public panic sell their futures, basically. And it's really sad. And do I like looking at my stock portfolio being down? No, I don't. But I do know that I'm not going to sell, because that's the worst thing you can do. Once I sell, they got me. Once you sell, you've locked in your loss. And just as when in March of 2020, when the pandemic hit and the market dropped, I think, 50%, it came back very quickly after that. Do I think it's going to come back as quickly this time as it did then? I don't know. Nobody really knows. That's the thing. I mean, if everybody was a fortune teller, everybody would be rich. But I know one thing: history is telling us that over time we will be back into a bull market, and things will head up the other way. And be rest assured, when they do head up the other way, it will probably be steady and be fast, especially for well run, well funded, profitable companies like Apple and Amazon and companies like Facebook. Facebook's taken a bad rap in the last 6 months to a year because of what Mark Zuckerberg is doing with the metaverse and so on. But there's a lot of underlying factors with Facebook that a lot of people don't realize. They've been sinking a lot of money into artificial intelligence, and Facebook is still visited by billions of people, around the world on pretty well a daily basis, and it's not going anywhere. So, um, you know, these types of stocks will come back with a vengeance when they do. So, just wanted to do this video to just make people understand that the world isn't going to come to an end. And are we still going to see more losses at this point? Or not losses? Are we still going to see the market drop more? No idea. I have no idea. I'm not a fortune teller, and I'm not an insider in this industry or anything like that. But I know that it always goes down and it always comes back up. And the feds of the world and the governments of the world um, won't let it go down and go off the face of the earth, the markets, that's for sure. All the pension funds um, around the world, corporate pension funds, educational pension funds, government pension funds, they all have money in the markets. And, if the market's completely tanked in a scenario like back in the Great Depression, well, as the old expression goes, put your head between your legs and kiss your butt goodbye, because, the financial system is done at that point. I honestly believe, in my humble opinion, and this isn't financial advice, we're pretty well at the bottom of this market. And, you know, uh, just don't sell. I'm not selling, and I've actually bought more now that it's down, and I'm looking forward to 2023, because I think you're going to see some big changes going on in the world. You're going to see maybe the war in Russia, Ukraine, ease up or end. Um, I think that you're going to see interest rates start to get curtailed, because the interest rate cycle is generally excuse me, the interest rate cycle is generally 6 months to a year behind, and the effects of the interest rate increases in the last 6 months to a year haven't really fully affected the market yet. You would think they have by what we're seeing, but they don't. They're a lagging indicator, and the feds in North America, like the Canadian Fed and the U.S. Fed, and a lot of the European feds, they really don't want to overshoot and kill the prosperity of their country in the name of beating down inflation. And I believe inflation is heading in the other direction now anyway. Supply and demand and all that sort of thing. So anyhow, I would look forward to some comments about others, how they feel about what's going on in the markets, and where they think this is all going. And again, thanks for watching. Please subscribe to my channel and hit that like button. Hit the notification button so you get all my future videos that I bring out. I'm going to be doing a lot more of them about the stock market and finance and pensions in Canada and the U.S. and retirement in general. Thanks a lot. Have a great day. Bye now.